Each bank, each lending institution will have one of four different department names to see about buying their non-performing debt. Big banks will often have a special assets department. Mortgage companies, other banks will have a secondary marketing department. Some of your smaller banks will have a chief credit risk officer, or even like the one-off branches might even have a loan officer that does that. Your insurance companies, which will often have a portfolio of a bigger portfolio of notes, will also have something called the whole loan trading desk. Now, you don't have to buy in bulk always. Now, yes, some banks want you to buy in bulk, like this really, really big banks. Chase, Citi, Wells Fargo, Bank of America. You're not going to buy a one-off note from them. But many institutions, many banks, many smaller lending institutions will allow you to cherry pick a one-off note from their portfolio. You don't have to buy a big thing. You're not going to buy a lot of notes from credit unions because they don't carry a lot of mortgage debt on their books. But I've been buying non-performing notes, even performing notes from other note investors for a while. But if you're interested in non-performing notes, you can always jump on LinkedIn and look on there and do the search for, like, once again, secondary market manager, chief credit risk officer, whole loan trading desk, and special assets department. And part of it is you're not going to ask for REOs. You're not going to call. You're not going to walk in your local bank. You're going to actually pick up and track down the main corporate office and ask to speak to somebody in charge of special assets department, secondary marketing, chief credit risk, or whole loan trading desk. Okay. Now, if you're dealing with mortgage bankers or mortgage brokers that have a warehouse line, you may want to ask who's in charge of the warehouse line, or they've got any scratch and dent loans or non-performing notes that they've had to take back on their portfolio. So not difficult. It's just a matter of dialing for dollars, or like I like to leverage LinkedIn to connect with 50 to 100 of these individuals on a daily basis by automating it with like an Octopus CRM. But you can look at BauerFinancial.com or the FDIC.gov, where these banks file their quarterly reports to see what type of reserves they have, see how much non-performing notes they have. This is all public information they have to release to have FDIC insurance coverage in case something happens. But those that have a higher percentage or a higher ratio, as they call it, a Texas ratio, shows that they have more debt on their books that's non-performing than what the value of their actual whole portfolio is. But check it out. Those four job titles, it's a matter of just dialing for dollars. If you talk to 50 people, if you make 50 phone calls, you probably talk to 14 people and have 4 or 5 deals come away from it.